Today, I want to talk about ways to secure your savings so you will always have a store of value you can use to purchase goods and services. Fiat currencies, like the US dollar or the euro, are the currencies that are issued and backed by governments as legal tender. In today's world, they're the most widely used form of currency for everyday transactions, investments, and international trade. However, relying solely on fiat currencies can have its dangers and drawbacks. One of the main dangers of relying only on fiat currencies is inflation. Governments have the power to print more money whenever they want, which can lead to an increase in the money supply and ultimately, inflation. When the supply of money exceeds the demand for goods and services, prices tend to rise, eroding the purchasing power of the currency. This can negatively impact individuals' savings and investments, as the value of your money decreases over time. Another danger of fiat currencies is that they are subject to government manipulation and political instability. Governments can devalue their currency to boost exports, control interest rates to stimulate the economy, or even impose capital controls to limit the flow of money in and out of the country. These interventions can have unintended consequences and create uncertainty in the market, leading to decreased trust in the currency. One alternative to fiat currencies is precious metals. A favorite of many people is gold and silver coins. The United States coins used to contain silver, but as the value of the dollar slipped, silver coins became more valuable than the stated value of the coins themselves. For example, a partially silver 1964 Washington quarter, issued as being worth a quarter of a dollar, is now worth $5.90. In times of inflation, money in the bank earns interest at rates below the inflation rate. For example, the government computed inflation rate in 2022 was 8%, but the average money market rate for 2022 was around 4%, and typical savings accounts paid even less. So, all your money in the bank lost buying power in 2022. A popular alternative is to use some of your money to buy gold or silver coins every month. Here's a short video about this idea.
Welcome. Today, we're diving into why you should consider accumulating gold and silver every month. Gold and silver have long been considered as safe haven assets that can protect investors' wealth during times of economic uncertainty. With the volatility in the stock market and the ever-present threat of inflation, it is becoming increasingly important for investors to diversify their portfolios and include assets that have historically proven to hold their value over time. This is where gold and silver come into play, as they have been prized for their intrinsic value and enduring purchasing power throughout history. A major benefit of investing in gold and silver is their ability to act as a hedge against inflation. When the value of paper currency decreases, the prices of goods and services typically increase. By holding assets like gold and silver, you can protect your purchasing power and maintain the real value of your wealth over time. One of the key reasons for including gold and silver in a monthly accumulation plan is their role in diversifying a portfolio. By adding these precious metals to a mix of assets, investors can reduce their overall risk exposure and protect themselves from market downturns. Gold and silver have a low correlation with other traditional assets like stocks and bonds, meaning that they can perform well even when other parts of the portfolio are underperforming. This diversification can help to stabilize returns and reduce overall portfolio volatility. In terms of strategies for including gold and silver in a monthly accumulation plan, one approach is to invest in physical bullion or coins. This allows investors to take possession of their assets and have a tangible store of value that they can hold onto during times of crisis. Another option is to invest in gold and silver exchange-traded funds, ETFs, which offer exposure to the precious metals market without the hassle of storing physical assets. Furthermore, gold and silver have a long history of being used as a form of currency and a medium of exchange. While modern economies are largely based on fiat money, the demand for precious metals remains strong, especially in times of economic uncertainty. By accumulating gold and silver every month, you can build a hedge against market volatility and diversify your investment portfolio. Investing in gold and silver means securing your wealth for the long haul. Historically, these metals have preserved value, making them smart investments. Accumulating gold and silver every month can be a wise financial decision that can help preserve and grow your wealth over the long term. By investing in tangible assets with intrinsic value, you can protect against inflation, market volatility, and economic uncertainty. In times of financial turmoil, gold and silver often outperform other investments. Having these metals on hand provides security and peace of mind during downturns. In conclusion, including gold and silver in a monthly accumulation plan can offer investors a way to diversify their portfolios and protect against economic uncertainty. These precious metals have a long history of holding their value and can provide a hedge against inflation and market volatility. By carefully considering the risks and potential benefits, investors can make informed decisions about incorporating gold and silver into their investment strategy.
Another thing we should consider is what happens if the United States suffers an EMP strike. An electromagnetic pulse attack, or EMP strike, could have devastating consequences on our modern economy and financial systems. In the event of such a catastrophic event, traditional forms of money may become obsolete or inaccessible. However, there are still several alternative forms of money that could potentially be available after an EMP strike. While the physical infrastructure of banks and ATMs may be affected by an EMP strike, cash is still a tangible form of money that could be used for transactions. It is important to have a supply of cash on hand in case electronic forms of payment are no longer functioning. Gold, silver, and other precious metals have been used as forms of money for centuries and could become valuable assets after an EMP strike. These metals have intrinsic value and can be traded for goods and services when other forms of money are unavailable. In a post-EMP strike scenario, bartering may become a common form of exchange. People can trade goods and services directly with each other without the need for traditional money. Bartering allows for flexibility and creativity in transactions and can help individuals meet their basic needs. In the aftermath of an EMP strike, goods that are essential for survival and daily living may become valuable forms of money. Items like food, water, fuel, and medical supplies can be used as currency in exchange for other goods and services. In conclusion, including gold and silver in a monthly accumulation plan can offer you a way to diversify your portfolios and protect against economic uncertainty. These precious metals have a long history of holding their value and can provide a hedge against inflation and market volatility. If you want to consider monthly accumulation of small amounts of gold or silver, check the link in the description. It will show you how to accumulate real value over time, so you can be prepared for whatever is coming. You may remember the admonition, be prepared. This is how you can be better prepared for the future.